This conference will now be recorded.
Okay, we're going to go ahead and get started this morning. I do have everybody's microphone off this morning so that we don't have any feedback. Okay. Before we get started, please take a moment to read over the risk disclaimer. It is for your protection as well as mine. Basically, you should never trade with money that you cannot afford to lose. Any type of trading, regardless of whether you're doing futures or Forex, anything, okay, is going to have risk. And if you cannot accept the risk, you should not be trading that market. Okay. All right. We're going to start at the top of the list, which is the ES. And the one thing that I'm noticing over on the weekly chart is that you do have a double top formation here. This makes me think we're going to have a down week. You see it on the weekly. You also see it over here on the daily. Okay. In addition to that, the weekly is also overextended. Okay. So that tells me that the market more than likely will come down and test for support. Now, as you can see over here on the 240, it has come down and it's made this small double bottom here. Now, that would matter to me, especially if we were overextended, okay? But we could come back and test this 2980.75, okay? That's your two scenarios, okay? I am not interested in taking a trade on this until I see whether these areas are going to support price or are they going to resist price, okay? I think that's going to be very important, okay? What I would like to see is we get a retracement on the 240, okay? I would like to see this go ahead and go overextended, maybe come down to 2980, and then potentially go back up and test for resistance. In other words, I want to see resistance form. Anybody have any questions on that? The way it looks right now, we're definitely going to go down. Is right now the time for the entry? No. I would rather wait and let this become overextended and reset itself and then enter the market. And the biggest reason for that is because you've only got about 9 points here. Okay. I'm not interested in that little 9-point move because my risk would be too great. Does everyone understand that? Any questions on that? Let's go and let's look at the Nasdaq. In the Nasdaq, you see that we have made a lower high over here. Now, there's a potential for this to be a head and shoulders pattern. If it comes back and it takes out 74.54, we're probably going to have a strong move to the downside. Okay, that's in the future. Okay, we are at the point of, oh, thank you, Emmanuel. We are at the point of being overextended on this weekly chart. You also see that we've made this little double top formation right here on the daily. That also tells me that more likely than not, we're going to come down. But again, is right now the time to enter that short position? And in my opinion, no, it's not. Okay. And the reason that it's not is you are in a potential support area here from 78.13 down to 77.97. Okay. And to give you some example, when I'm talking about support and resistance, okay, if I was to enter right now, we have the potential of going to here. Okay. Well, that's a 40-point move. But we also have the potential of being stopped out. So if we were stopped out, we're going to have to go at least to here, preferably a little bit higher. So you're looking at 61 points on the risk side versus 40 points on the reward side. That's called an inverse risk to reward ratio. It's not something that I recommend traders do. Okay. So again, this is not one that I'm interested in. Once this retracement over here on the 240 occurs, okay, then you could potentially enter a short position. Is this intended for Nadex or other forms of trading? It's any type of trading you do, Emmanuel. They're all going to be the same as far as your risk to reward and your setups go, okay? For example, if you were thinking about, let's say, taking a touch bracket on the Nasdaq, I would wait, okay? Right now is not your perfect time because right now you're going to have a touch bracket that's probably going to be up here at 79.24, but that's a lot of risk to carry for something that might find support at 77.97. Do you understand, Emmanuel? It's all about your risk to reward ratio, okay? I do think we're going to get another pop up because I think it still needs to test for an additional resistance area. Okay. All right. Let's go and let's look at the Russell 2000. Okay. You can see that on the weekly over here, you still got that double top formation. Do y'all see how it's hit this area in its resistant price? Okay. So that tells me that we could potentially come down to this plus sign right here at 1453.3. Okay. Over on the daily, okay, you see the same pattern. You see the pink lines over here, and then you've got the pluses coming off of them. That tells you that's a resort area. Now, it started 5 minutes ago. No, you're not late. Not a problem. Okay, so you've got this double top here, okay? Now, one of the things that I did is I made, it's a support and resistance indicator that's showing you the support and resistance from lower and higher time frames, okay? So this is a confluence of resistance in this area, okay? You have it on the daily chart, you have it on the 240, and you have it on the weekly chart, okay? So this is 3 time frames that it's telling you there is resistance there, okay? This tells me it has to come down and it has to do what? It has to test for support, okay? So to me, if you are going to enter a short position, the Russell actually has the better setup. I just don't like the fact that you have a support area right below you right here, okay? Now, if they go through this support area, then they're likely to come down to here. Does everybody understand that? So this is one I would go down and look at a lower time frame to see if there is a potential. Notice that you're not close to being overextended here. You're not overextended here. Okay. Those are real important concepts because that tells me I've got room for this to move down. Does everybody understand that? Any questions on that at all? Now, if you were to enter this, and let's say that price does come down here, and then it starts back up, and let's say by that time the stochastics is overextended, or you're making a divergence here, that would be your time to book it, okay? Don't stay with the trade like that. Okay, let's go. And any questions on the Russell this morning before I go over to the Dow Jones? Now notice also I'm using the continuous contracts this morning. That is because we've had rollover and I want to see more data than the current contract will show. For example, if I go to the actual current contract, do you see how there's no values passed here on these indicators? That's because the contract rolled over, which is why I'm using the actual continuous contract. for those that don't understand that. Okay, let's go to the Dow Jones. Now the Dow Jones, again, you're seeing this double top formation, okay? And this tells me that we're probably going to go down and we're probably going to test for support, okay? You also see that over here on the daily chart. You also notice that we were overextended on the stochastics. That's what kicked this off, okay? Now this has a potential, okay, to come down here to the ATR at 26,647. Okay, it has a potential. Right now it's at 26,864. So you're talking just about 200 points there. Okay. The only thing I don't like right now about this one is the fact that we're almost overextended. Okay. And you have a potential support area here at 26,755 as well as 26,715. Okay. Now, for those of you that scalp, could you go down to a lower time frame and scalp that? Yes, you could. Okay. For a beginning trader, I would not recommend that because, you know, you're going to try to stay with it too long. Okay. Emmanuel, I would need step-by-step explanations of the indicators in the trade plan, entry conditions, exit conditions, profit target, stop loss points, everything. Perhaps I missed earlier meetings which explained everything at the basic level. That's actually what we do in our coaching sessions, Emmanuel. When you purchase the indicators with the coaching sessions, which is a package that I have right now for TradingView, we go through all of that. It is probably virtually impossible to cover all of that in a 1-hour meeting. Okay. So in this one, could you scalp this level? Yes, you could. If you had experience with the markets and you're a scalper, okay? But for a touch bracket, I wouldn't even try that. Okay, I would just wait, let it form that support, let it become overextended. I would get the pullback on that to test for resistance, and then back down it would come. So any questions on the Dow? I think overall we're probably going to go down as it stands right now. Okay, at least to test for support. And if that support does not hold, they're going to go up. They're going to test for a new resistance area. That new resistance area will be lower than 27,266. It's probably going to be around 27,100. That's the move that I want. The next move down is the one I want. Any questions on that? Okay. Let's go over to the Aussie. Okay. Now on the Aussie, and I'll stretch this out a little bit, you can see that it has formed that resistance area right here, coincided with a slow moving average. I do think they'll come back and test for potential support area. Could it be the 6703? It could be. It could also be at 6750. Okay, especially with this being oversold at the moment, I would expect this to have some upward movement. Okay, you also see that here where they're developing this bullish bar right now. I would actually like to see them get closer again to test this support area. Normally you will see a double bottom here. That's what's going to actually kick that off. Okay, does everybody understand that? You pretty much see it over here. Do you see how that made a double bottom? Okay, you see it on the daily. It made this little double bottom and then it kicked it off. That's what I would actually like to see over here to kick it off. Okay. On the euro yen, okay, You can see that this is moving up. It's come back and it's trying to test this moving average. Again, what would I like to see? I would actually prefer that it come back and test here. Again, looking for the double tops and double bottoms. Okay, that's what I would like to see. Okay, the same thing over here. You can see that it made a high here, came back to test it here, formed that bearish bar. Now it's coming down, it's testing the ATR in the slow moving average. Okay, one thing that I would notice off the bat here, you're not overextended on the stochastics. Okay, so to me, I think it might actually come down to here. Would really prefer to see it come here. Okay, that's what I would like to see on a daily for a longer term trade. Now, if you're looking at the 240, you can see they're coming back to test this level right now, and they're making that bullish bar. If that continues, this is likely to go up to either 118.58 or even 119.09. That's 100 pips. Okay. So that's one. If I was looking at that and say, hey, I might would trade that to the long side on a lower time frame and then watch it, because when it gets back to either the 118.60 or the 118.99 area, then I'm going to potentially look to see if it forms resistance, and that will take it down and do another test of this area. That's what's going to give you your double bottom formation. Any questions on that? All right, let's go look at the euro dollar. Now, on the euro dollar, you can actually see that you've made divergence over here. That usually will push it up. But again, do you see how they're coming back to test for support? Okay. If they don't test that support there, okay, then they are liable to go down and make new lows. Do y'all understand that? All right, when we come down to the daily chart, they've already tested it here, okay, and it held. Uh, could they come back and test it again? Sure. Do you see how that level is marked over here? Okay. But when you look at that chart, okay, you already see that they've tested it one time over here. This was your first double bottom, okay? So now they could potentially come back to here just like they did here, okay? They're going to come back to 1013 and then potentially come down here and test 0926. It's going to be important that it forms a resistance area at 1014, okay? And that's the level that I would actually be watching. Because if that area forms that resistance area, then you have a nicer move down to 0927. Okay. Let's go and let's look at the British pound yen. You've seen that they've made that double bottom over here already. They came back to the slow moving average, and they're potentially forming a reversal bar there. Okay. Here you already have the reversal bar. No, Nestor, you're not going to be the presenter. Okay. So you've already made a bearish reversal bar here. And that tells me that this is potentially going to come down to at least 132.26. Okay. And that would be equivalent really to this line right here at 132.15. That's where you're going to have your confluence in there. Okay. Now, will it come down there today? No, it's probably going to do a retracement because you're overextended here. This is where I'm waiting for this retracement on the 240. And then once it forms resistance, that's where I'm actually going to enter that trade. Any questions on the euro yen? And if you're measuring that and saying, okay, if I'm a really short-term trader, could I trade this back to the moving average? Yeah, that's 74 pips. Could I trade it back to the ATR? Well, yeah, that's 124 pips. Okay. But your bigger trade will come if they form that resistance area there. That's where your bigger trade will come in. Now on the USD JPY, again, you're seeing that double bottom formation right here. They went back, they tested the same area. It did form a support area, so they pushed it up. Right now, you have that bearish expectation bar, okay? And on top of that, you have another bearish bar forming here, okay? At the same time that you had divergence over here on the daily chart, which should push this down to about 2,300, okay? That equates to this line right here over on the 240. Now you will have to watch out, okay, for this area right here, okay? But with this being overextended, what would the better trade setup be? The better trade setup is let it come back here and test. It's either going to test the fast moving average between the fast moving average, which is here, and this ATR, which is here. Okay. You also see that you have another moving average here, another moving average here. Okay. So it's going to come back and it's going to test for resistance. That's what you're looking for, that resistance area. Okay. Now, you could trade that. It would be a very short-term trade where it goes up. But the bigger trade, again, will be when it forms a resistance area and then forms that bearish bar and then it comes down. That's going to be your bigger trade setup. This, to me, would be more of a scalp. Not everybody can scalp. Any questions on that? Let's go look at the USD JPY. Now on the USD JPY, again, you can see that they've come up and they have tested and potentially formed a resistance area here. Now this resistance area goes from here down to here, okay? And they can actually play in that area. Sometimes they'll do that if the market's moving slow, okay? But if you come over here, you can also see that there was a divergence there, okay? So that should kick it off to either come down to here or down to here. That's just about a 50 pip spread there where they could test for potential support, okay? Given that we're already overextended on the stochastics and on the ADX, I believe that we're probably going to go up at least to about 107.70 up to probably 108, okay? Now, in between here, okay, is where they're likely to develop a resistance area. And you'll see it because you'll see this line of pluses there, okay? And then you'll have a bearish bar form, and the bearish bar would be the kickoff to a bigger move to the downside. Your next area that may support price will be 106.60, but then your next area is down here at about 105.80. Does everybody understand that? Any questions on that? All right. Let's move on to the USD Swiss franc. And the USD Swiss franc is potentially developing a resistance area here, okay? you're just about at the point of being overextended, but not quite there yet. Okay. But if you look over to the daily, you see you've had that divergence there. Okay. And that should kick it back to here. It could come back as far as here. Okay. Over on the 240, you do see that you've hit that support area right here. And that's 1, 2, 3, 4, potentially about 5 times it's identified this area as supporting price. Okay. So that tells me that more likely than not, you're going to get your new support area in here. I would be targeting the 99.40 area. And that's where I'm going to be interested because that's potentially going to be your bigger move. Does everybody understand that? And that's what using the higher time frames, that's what it's all about. Okay, do I need to go down to the lower time frame and take these small trades, or can I take a bigger trade by using a higher time frame? Okay. When you're trading using these higher time frames, you're not trading. You're waiting for the bigger setup, and that's the move that you're catching. Now, there are some issues this week with the markets. Okay. Let me take all my scribbling off. Number one, today at 9 o'clock, the ECB president speaks. If you click on the little folder, you can actually see what he's going to be talking about. And in this, he's testifying about the economy and monetary policy. Now, that could affect the euro currencies. It could also affect the British pound. Then if you come down to Tuesday at 1:30, you see that the Bank of Japan governor is speaking. And also the RBA governor, Lau, speaking. And he's due to deliver a speech. Now, the speeches do not affect the market as much as the testimonies. The testimonies actually affected a lot more. We also have the there's something happening Tuesday and Wednesday, I believe, this week. And now I can't remember what it was. It's not on here, but there is a summit Tuesday and Wednesday. It might be even Thursday. So you have to be careful about that as well. And that one is not listed here. I just can't remember the name of it right now. Tuesday also, you have at 10 o'clock, you have the CB consumer confidence. Wednesday, you have the crude oil inventories. Then on Thursday, you have the ECB president speaking again. And this is opening remarks, may or may not affect the market. Okay. Then you have the Bank of England, Carney speaking. And that is a panel discussion. Now, panel discussions may affect the market because you may get some questions in there that cause a market movement. Okay. So you want to watch out for that one. And then you have the core durable goods and personal spending month over month on both of those at 8:30 on Friday. So those are some that you want to watch out for. Now, so far this morning, these are only the red reports. If I go ahead and put the orange reports on here as well, that's where you're going to see this morning. Most of your reports were actually pretty bad on the European side this morning. So these are ones that you really want to watch out for. You also see that, excuse me, the FOMC members are speaking Monday and Tuesday. No, they're all Mondays. And then Wednesday is the next one. And audience questions are expected. They're not sure what they're going to do. And then on Thursday, they're speaking again. During these, you might see some volatility in these markets as well, because they're going to try to read into what they're saying to decide what they're going to do at the next meeting. Are they going to raise the rates again, lower the rates? What are they going to do? Okay. And this is where they really look at the speeches. Everybody's nervous over what's going to happen next. Okay. Any questions this morning, guys? Okay, if there's no other questions, I'm going to go ahead and end the presentation today. I do appreciate you all joining me for the webinar this morning. If you have any questions, by all means, you can email me at gm@tradershelpdesk.com, and I'll be more than happy to respond.